Hello, I'm Bernard Hickey and welcome to interest.co.nz's Housing Report. Today we focus on mortgage rates because today is the end of an era. No longer can you get a fixed mortgage rate at below 9%. Kiwibank this morning dropped its special rate of 8.95% for its 5-year fixed rate mortgage. And on Friday, BNZ dropped its 8.88% mortgage rate for its 5-year special. That means you can't get a fixed rate mortgage at less than 9% at any of the major banks. And in fact, for the 2-year rate, which is the one most people go for, that's currently around 9.7%. And for the 5-year, the best you'll get is around about 9.3%. This really is the end of an era and shows just how fast fixed mortgage rates have risen in the last couple of years. You've got to remember that back in 2004, when the housing market was in its boom period, you could get a fixed rate mortgage for 6%. For most people now it's 9.7%, and some people have talked about fixed rate mortgages going over 10% sometime this year. Now that depends what's happening on the wholesale interest rate markets, and they've really been roiled in the last couple of months by the global credit crunch. Now things seem to be calming down there. If you look at this chart here, you can see over the last year that wholesale interest rates have been rising. In the last couple of weeks we're seeing some stability, so the signs are good that maybe interest rates, particularly fixed mortgage rates, may not rise that much further. It all depends though on what's happening in those global credit markets. And remember, New Zealand is quite vulnerable when it comes to borrowing from foreigners. That's because, as you see here, our current account deficit is still a tough one to finance every year. In the last few years we've dropped from having a current account deficit around 4 or 5 billion to around about $13 billion now. That's almost 8% of GDP. That means we're spending around $1.13 or 14 for each dollar that we earn, and that means that we have to borrow it from overseas. If foreign investors become worried about our current account deficit, they'll be less likely to borrow to lend to us, and we'll have to increase our interest rates. So there's some vulnerability there. I'm Bernard Hickey, and that was the Housing Report from interest.co.nz.